Hi guys, welcome to the channel. In this video, I'm going to talk about compounding. This is the most important factor in all of investing. There's a saying that says, he who understands compounding interest earns it, he who doesn't pays it. Um, it is the ability for your money to multiply over time. Now, there's two things I hear people who don't know how to invest say all the time. The first one is that they don't have enough money to invest, and this is a really dangerous assumption that hopefully I can challenge in this video. And the second one is they don't know anything about stocks. Thankfully, knowing about stocks is not a prerequisite either. So in the 1980s, these things called ETFs came around, called exchange traded funds, and it's basically a fund containing loads of stocks. And what you can do at any given time is you can just buy the market. And if you buy the market, you will outperform the vast majority of professional investors. So for example, if you buy the S&P 500, you're getting access to 500 stocks, which are fully diversified and the best 500 stocks in America, just with that one purchase. This is all you ever need to know about investing. So what you need to do is take whatever small amount of money you have now and put it into these ETFs and let it compound over time. And hopefully when I run the numbers for you here, you'll understand why you need to do this and why you need to lose the idea that you don't have enough money to invest. So, in order to demonstrate just how powerful this can be, I'm going to show the strategy that we call buying the market. So, buying an S&P 500 ETF. In this case, I've used the Vanguard S&P 500 ETF, ticker symbol VOO. That's one I hold myself. And what I'll do is I'll get the stats for the portfolio up on the screen here. And as you can see, its 1 year return at the minute is 28.21%, which is crazy returns. Looking back, we know we've been through a strange economic climate, but the 3 year average returns is 10.18%. As we go further back, it's still fairly consistent. The key thing to note here is it's never dropped under 10. But if you'd have bought it when this first came out, since inception on the 7th of September 2010, you'd have got annual returns of 13.78%. So let's think of a scenario here. And hopefully this will help people understand compounding and why it's essential to get money in the market early. But let's assume someone's only got 15,000 to invest. This would be seen as usually a low number. Some people might not bother to invest if they had this kind of money because they might think it would be better to go elsewhere. And what we're going to do is we're going to invest it as 5,000 across 3 years. We're going to go 3 years, each year, £5,000 and dollars invested. We're going to leave it for 30 years, see how it compounds. And hopefully this will show why it's really hard to comprehend compounding and why you really need to let it work for you. So I'll go to a compound interest calculator. I'll say we're going to invest our £5,000. Our interest rate is 13.78%, and we're going to invest it for 30 years. So if we calculate our returns here, then we would have $304,868. So pretty good returns, but it doesn't blow your mind, I don't think. Across 30 years, you maybe think, oh, there's maybe better things I could have done with the money. That's not incredible. If we then look in the 31st year, the returns on the 5,000 goes up to 349,000. So there's basically $45,000 earned in the 31st year. And then if we go to the 32nd year, we can see that we have 400,000 now. So we've gained another $50,000 basically in the next year, go 32nd year. Now what's crazy around this is what I'm describing here is only the initial £5,000 investment. So if you think about it, when we invested in the first year 5,000, the second year 5,000, and the third year 5,000, they have all compounded across 32 years, 31 years, and 30 years now. And so actually we have the first value, which is now worth 400,000, the second 5,000, which is now worth $350,000, and the first one, which is worth $300,000. So that's over $1 million. And to show this, which will not be 100% accurate because it's not compounded at the same rate, but if I was to look at saying we'd initially put $15,000 in and the time period was 30 years, we've got 914,000. And actually, we've got 2 years of additional compounding that this isn't considering right now. So don't be deterred on thinking you don't have enough money to invest. I know the thing is, the more you can put in at the start. So if we went, for example, to say we managed to do this for 5 years and got 25,000, and at the point then we've compounded 35 years, we now have $3 million. So time in the market is essential. The more you can put in at the start, the better. But remember, there is no small enough amount that this is never a good strategy. Get the money in the market and let it compound. And if we were to even just show an example here of going one additional year when you get to this rate, 3.5 million, you're getting 500,000 a year. And 5,000 is probably achievable for most people. So remember, you don't need a financial advisor. You don't need crazy funds. You don't need to pay brokerage fees. All you need to do is get your money into a market ETF and leave it there, and you will compound over time. And the crazy thing about this is just the returns. This doesn't even take into account what dividends you'll get paid from a $3.5 million account. So there you have it, guys. It really is as simple as that. Put the money into the market and leave it. Like, the dividends that you would be earning there in that final year are in the region of $30,000. So that's more than your initial investment for the three $5,000 inputs. So try and get your head around compounding and understand it's all you need to know about, and you need to get it working for you. If you like this video, please do like and subscribe. And if you want to see my full portfolio, which you've seen there in the video, it's CO'Neil2318 on eToro. I'd love to hear any comments you have around the portfolio. Leave me any comments if you want to know more down below. Thanks for watching, guys.